All right, guys, this is the product training session of our call. Jimmy and I are going to be covering the Mutual of Omaha product. It's the Guaranteed Universal Life Express, or GULE for short. This is a great product, guys. I know, Jimmy, you've written a ton of this product. Over the years, I've written, I don't know, if not maybe not hundreds, but I've written many of these policies. It's a great product. You just got to understand the right fit and who the right client is for this particular product. So with that, it is available utilizing the mobile quoting app. Everyone should have the Mutual of Omaha quoting app on their cell phone. You just go to the App Store, type in Mutual of Omaha. It'll pop up. It's the one for, I think it says for
Sales
quoting
professionals.
for sales professionals. Download that to your phone. There's no password required. It works beautifully. So make sure you got that on your phone. This is just a real quick highlight sheet here. The issue ages can go all the way down to age 18 to age 65. So if you have, and I thought didn't they mention they were going to increase that to 70 at some point?
Yeah, it's coming, but it ain't there yet.
It ain't there yet, but guys, it's coming. The issue ages on this product, and I believe the Term Life Express, at some point, it's in the future, it is going to be raised to age 70, which will be pretty cool. As far as the face amounts start at 25,000, and you can go all the way up to 300,000 if they're under the age of 50, and if they're over 50, you can get $250,000 of insurance. So you have some of those clients that have money and they're looking for the bigger premium or the bigger policy. This could be a great opportunity. It is simplified issue. There's only two rate classes, guys. It's either standard non-tobacco or standard tobacco. So it's written at a table 4. It's written at the exact same table that the Term Life Express is written at. Okay. Let's see, surrender charges for the first 19 years if they cancel it. Let me see if there's anything in here we need to know about. Riders, there's a ton of riders on here. Comes with the accelerated death benefit for terminal and chronic illness. So that's obviously different than final expense. You have the waiver of surrender charges for partial withdrawals, guaranteed insurability rider. That's if let's say they take out 25,000 in the beginning, but then they want to take out more coverage. There's a provision for that. There's an accidental death benefit rider that's available. Disability is available. Disability waiver of premium, and there's a dependent children rider. No grandchild rider, but a dependent children rider. Now, keep in mind, guys, this is not a replacement to final expense. This is in addition to. So the majority of our final expense clients are not going to qualify for this platform. As an example, if they've ever had a heart attack or a stroke, even if it was 10 years ago, not going to qualify for this program. You gotta read through the underwriting guideline. If you've ever written the Mutual of Omaha Term Life Express, this is it's a duplicate. This is the permanent version of Term Life Express. That's the best way to describe this product if you're familiar with Mutual's Term Life Express. Guaranteed interest rate of 3%, low cost loans, partial withdrawals, death benefit guarantees. Now, this is something that I wanted to talk to you guys about. When you quote the GULE, when you use the mobile app, it's going to ask you how long you want the guarantee to be. I typically always do the 120. So you can have coverage guaranteed to age 120 or a minimum of 80, which is way too short. Guys, if you look at the difference in the premiums between, let's say, 100 and 120, it's really not that big of a difference. So if you ever quote this product, I encourage you, just go ahead and quote it at guarantee the rate for 120. You won't be disappointed. And I would just hate to be that agent that writes a policy and on this, and they live to be 101 years old, and they have no coverage because you only guaranteed it to 100. Just get used to doing it at 120.
Hey, Joe,
Yeah,
can I say something about that real quick?
yeah, sure.
On occasion, this is like don't come up too often. Maybe there's somebody out there that is, let's say 64, 65, and they want a higher face and they're looking for a term. Okay, maybe they're looking for a 10-year term or 15-year term or 20-year term. This is where you can use those lower ages, kind of use it like a term. It is a permanent policy, but so like if you had somebody that was, let's say, age, I don't know, let's just call it 65, right? You could quote them to age 80 and quote it like if it was a term, or age
True.
85 and give them 20 years. That would be the strategy to use the lower ones, but you never want to use that lower age for a permanent, sell. So if you're selling as permanent, just like Joe said, quote it to age 120. That way, it's never going to, run out.
Yeah, that's a good point, Jimmy, because I never really thought about that. If you're like competing with term, um, that yeah, you could use it to your advantage that way. Good point. Let me see what else we got, guys. Here's just some of the riders. This is a sheet that I got off of their website. Actually, this is part of the brochure, is what this is. Um, Accelerated death benefit for terminal illness rider. Um, this is good. This rider provides an accelerated death benefit if the insured provides evidence that this is the accelerated, that their expect life expectancy is 12 months or less. Okay, that's the normal. I want to get down to the chronic illness. Okay, accelerated benefit for chronic illness. This is something that your final expense application would not have. And it reads, this provides an accelerated death benefit if the insured is unable to perform 2 of the 6 activities of daily living, ADLs, for 90 consecutive days, as certified by their physician, or requires substantial supervision. I'm just going to read through here. Okay, so this is an opportunity for them to receive up to 80% of the face amount if they don't have to have a terminal illness, but just a chronic illness. Let's see here. Guaranteed insurability rider, we already talked about that. Disability waiver of policy charge rider. Let's see here. Accidental death benefit, and then the dependent children rider as well. So those are the basic riders that you can get with this product. So it's a little bit more expanded as far as the availability of riders and bells and whistles that you would get for a final expense client. But remember, again, this is for if you're going to write this on one of your final expense leads, you really got to make sure that you're dealing with someone very, very, very healthy, and you feel positive that they're going to get approved. Because if you write this and they get declined, it's going to be tough to switch them back to a final expense policy.
Oh yeah, that ain't gonna happen.
Yeah, I mean, right, exactly. So just be 100% sure. Really go through their medication. Really, really, really make sure. Here's another sheet that I pulled up. This just has some selling tips on here. Who it would be good for, guys. You can get this off of the Mutual of Omaha website. This just talks about the no lapse guarantee. You can do it for up to age 120, or the minimum, which is 80. And then they also offer to age 100 as well. I don't know if they had, Jimmy, if they have an in-between age? Or does it go 80, 100, 120?
You can actually do any age from 80 to 120. I mean, it could be 81, 83. It doesn't matter. On the phone app that you use to quote,
Yeah.
it only does it in increments of 5. But if you were working on the computer with the illustration software, you can make it any age you want.
Got it. So you could make it 110 as an example.
Yes.
Yeah. So guys, run the quotes, but what you'll find is if you quote it for 110 and 120, there's virtually going to be no difference in the premiums once you get up past age 100. Let's see, no cost riders, the guaranteed insurability, the accelerated death benefit, waiver of surrender charges of partial withdrawals rider that may vary from states. Here's some selling tips. GULE is an affordable, flexible policy because of the length of the no lapse guarantee. That's what Jimmy was talking about, where you can adjust the premium by adjusting the guaranteed features. And this is what this is talking about. If you see down here where it says, this is what Jimmy was talking about, the dial down feature. That's where you lower the guarantee from 120. So this just gives you an example. Here you got an example of a male age 40. This is a younger person, $75,000 face amount. If you cover them to age 120, premiums will be $76 a month. You dial it down. Let's say the guy really only needs it till he's age 80, guaranteed. You could lower the premiums down to $52 a month. Or you could bump it, let's say 85. You could really let the client dial in how long they want the coverage for. You know, that would be a good way of presenting it. Here's some other rates down here. Here's another example. Female age 63, standard non-tobacco, $25,000 face amount. Coverage. Yeah, so here you're doing it, you're varying it. You're showing the client this is what it would be to have you covered for 20 years, 25, 30, 35, or 57, and the difference in the premiums. So maybe they don't have longevity in their family. Maybe everybody in the history of their family has died before age 90, you know? So maybe you could do it as like a 30-year term. You cover them to age 93, that's 30 years, or maybe go 35 years. So for $19 a month, they may opt to have coverage till almost 100. So there's a lot more flexibility with this product than you would get with a lot of other products. There's actually a lot more flexibility with this product than you would get with like the Term Life Express, because Term Life Express is only guaranteed renewable, I believe, age 95 or 100. I mean, the premiums really shoot up. Where here you can really, I really like that dial-in feature that you can use. Here's just a real quick kind of a scenario that I put together using a GULE. Let's say you got a male, you got Roger, age 65. Let's say this guy's super, super healthy, like very few medications, no heart attack, strokes. I mean, he's just in really good shape. Just takes the normal stuff. High blood pressure, cholesterol, all that stuff is fine. They can even be diabetic on this as long as their diabetes was diagnosed after the age of 50 and there's no complications. So you can even have let's say your client who's in their 60s and all they really have wrong with them, they have diabetes. Even if it's insulin dependent, that's okay as long as it's totally under control and it was diagnosed after age 50. Okay? But just take a look at this. $25,000 face amount. I'm going to guarantee this one to age 120 because this guy this is a final expense replacement. He's looking for final expense. I can get him a monthly premium of $114 a month. You compare that to a Living Promise, the exact same face amount. Living Promise would be $134 a month. So that's a pretty good savings in that. We just got to make sure that we're showing this to the right client, because like Jimmy said, you quote them this, they get declined, you're going to have a tough sale getting them back onto a regular final expense product. Guys, the application for this is really simple. It's the exact same application that you use for Term Life Express. Okay, this is the cover sheet. Right here, Universal Life Express. This is the one. If you're doing it the term product, then you would do this one right here. As far as the application goes, what you would do is for the plan, you don't do this. You drop down here where it says for the permanent coverage. This is where you're going to write it in. You're going to check the box, guaranteed Universal Life Express amount, and this is where you're going to put in the amount for the coverage. And then here, permanent riders, if you're using any riders. Accidental death, dependent child, disability waiver of policy charges rider, put it all right there. And of course, the regular information, client's information goes up at the top. That's no different. Make sure you do the beneficiary. Make sure you answer all the questions. Very, very simple application. Oh, as far as applications, I forgot to include this part at the end, but with this one, you can either do a paper application or you can do an electronic application. Okay. Health questions, guys, the health questions are exactly the same as Term Life Express. Said that a couple of times, just going to say it again. Remember, you can be diabetic. Let's see, let's talk about diabetes before the age of 50. If you answer yes there, you're going to be declined. If the diabetes was after the age of 50, then you're going to be okay. As long as there is no complications. See if there's anything else in here. Like I said, if you're familiar with the Term Life Express, this will be pretty easy.
And Joe, the other thing I wanted to point out is a common mistake people overlook.
Okay.
When it comes to health, is if they're on any type of disability that has nothing to do with their back or their knee, it's a decline.
Oh, right. It says it right here. Let's read it. In the past 12 months, has the proposed insured applied to receive disability, hospital, medical benefits from an insurance company, government employer, or sources other than for maternity, fracture, spinals, back disorder, hip, or knee replacement? So to the contrast of that, they can be on disability insurance if it's for like a back or a knee injury, as long as they're not like in a wheelchair and they're not crippled, you know? So you do run across that sometimes. You have a client that is on disability, but it's because of a bad knee or a bad back, or maybe they had a hip replacement done. That is okay, but anything else, not good. Not. So if they have diabetes and they got approved for disability because of their diabetes, they're not going to be approved for this product. You want to expand on anything else as far as medical?
No, I just wanted to make sure because I often see rookie agents make that mistake.
Yeah.
And it comes back to bite them, and then they kind of price themselves out, and people can't get that rate, and then they don't want to buy anything. So
Right.
just make sure that if they're on some sort of disability, if it's not the knee, the back, or just maternity, then this is not the right product. And that goes the same for Term Life Express.
Yeah. The other thing too, I'd say be careful on is people on depression medication.
Yeah.
We're used to it with our final expense apps that most companies don't care, if you're, depressed, whereas it could be potential hazard here. I know it says, bipolar depression right here. So if they're on depression medication, you better be careful exactly what it is.
And when in doubt, you can always call in to Mutual of Omaha and ask for a risk assessment.
Yeah,
And
that would be the best thing to do.
that ahead of time before you actually fill out the application.
Guys, producer statement, make sure you fill out the producer statement in its entirety. Get your signature on there. Payment authorization form, this is pretty straightforward. You're gonna fill in the box for the initial premium. Like, do they want the premiums, if they want it future dated, or do they want premiums deducted immediately upon issue? And then here you can do the ongoing payments. It's you can do it from the 1st to the 28th, or if they are already on Social Security, you can do it on one of the Wednesdays, 1st, 2nd, 3rd, or 4th Wednesday of the month as well. And then here you're just going to put in the banking information. Guys, this is all pretty straightforward stuff that we're used to. Continuation of the producer report. This is asking, don't let this throw you off. This is asking if they've taken out a recent mortgage. This product and the Term Life Express are also used for mortgage protection products. It's not required that they have a mortgage. So just answer the question straightforward. If they don't have a mortgage, if they haven't done a new mortgage or a refi within the last 2 years, just answer no, and just you can NA on the mortgage amount if they don't have a mortgage. Let's see, this is just a sample, the accelerated death benefit. We're going to skip over that. It's just the language on there. Make sure you do get a signature so they do understand the accelerated death benefit. Conditional receipt. This needs to be done on every single policy, whether you're collecting a check or not. So make sure you date it up at the top. I know I've missed that a few times. And then down at the bottom, you're going to have your client's going to sign here. You're going to date it. And what you'd want to do is, since you're probably not collecting a check, you're going to check the box electronic transaction authorization, and then make sure you put in the dollar amount, and then your signature there. And I think you're getting pretty close to the end. And then the last page, this is the cover sheet. If you're faxing your applications in, if you're not doing an electronic app, make sure you fill out this submission form to submit your premium. I'm hoping that someday that Mutual will get a way for us to either email in applications or like Transamerica, you know how you can upload them to underwriting department. I think that would be it'd be really cool if they could get that system done here soon. But as of right now, guys, with this application, only 2 ways to really write it. You either got to do a paper app and fax it, or you have to do an electronic app on your tablet or your laptop and get e-signatures. Jimmy, anything you want to add?
No, sir.
All right, guys. Well, we ran a couple of minutes over. Appreciate everybody taking the time. I hope this information today has been helpful. Everybody have a great weekend, and we will talk to you soon. God bless.
Bye-bye.
Bye, Jimmy.